Welcome back, everyone. You've joined us for another deep dive, and today we're looking north, specifically at Coeur d'Alene, Idaho.
That's right. And it's pronounced Coeur d'Alene, for anyone wondering. We've got an office market report in front of us.
Yeah, a fresh one. And our mission today is pretty straightforward. Pull out the key insights, especially focusing on what was happening right at the start of 2025, Q1 specifically.
Exactly. Give you a clear, concise picture of the Coeur d'Alene office scene as of the fourth quarter of this year.
Okay, let's dive in then. Vacancy rates, always a big indicator. What did things look like in Coeur d'Alene at the end of Q1 2025?
So the report pegs the vacancy rate at 5.7% for Q1 2025.
5.7%. How does that stack up historically? Is that high? Low?
Well, it's definitely higher than we've seen in recent years. The 5-year average vacancy is closer to 3.0%, and the 10 years about 3.7%.
Ah, okay. So nearly double the 5-year average. That's a pretty significant jump.
It is. And looking at the full year leading up to this point, vacancy was up about 2.3 percentage points.
Right. So what drove that increase, especially thinking about Q1? Any big moves in supply or demand?
Okay, so focusing just on Q1 2025, the first 3 months, we saw about 54,100 square feet of new office space actually delivered, completed construction.
54,000 square feet. Got it. And on the other side of the equation, absorption. Did companies lease up space?
Well, this is interesting. For Q1 2025 specifically, the net absorption was 0 square feet.
Zero. So basically, for every square foot leased, another square foot was vacated, flat overall.
Exactly. No net change in occupied space during that quarter, despite that new supply coming online. So you can see how that pushes vacancy up.
Yeah, that makes sense. New space added, but no net increase in takers. What did that mean for the total available space, including vacant space?
At the end of Q1, the total vacant space was about 343,680 square feet, which gets us back to that 5.7% vacancy figure based on the total inventory.
And speaking of supply, was there much more in the pipeline? What about construction activity during Q1?
Activity was pretty limited. As of the end of Q1 2025, there were only 6,200 square feet under construction.
Just over 6,000. That sounds low.
It is, especially when you compare it to the 10-year average, which is around 32,000 square feet typically under construction. So yeah, a definite slowdown in new projects starting up.
Okay, so higher vacancy, flat absorption in Q1, very little new construction. Let's look at the inventory itself. How big is the overall Coeur d'Alene office market?
The total inventory at the end of Q1 2025 was sitting right around 6.0 million square feet. Just over, actually 6,005,549 square feet to be precise.
6 million square feet. And how does that break down? Is it mostly high-end Class A stuff or?
It's actually more weighted towards the middle and lower tiers.
Yeah.
Roughly 2.5 million square feet is classified as 3-star, and about 3.5 million square feet falls into the 1 and 2-star categories. Less of the high-end 4 and 5-star space.
Interesting mix. Okay, let's talk money. Rents. What were the trends there in early 2025? Did that higher vacancy put pressure on rents?
Well, the market asking rent, looking at the year-to-date figure for Q1, was $21.71 per square foot.
21.71. Was that moving up or down?
It was still showing some positive growth, actually. The year-over-year change, looking back 12 months, was an increase of 1.5%. That's slightly better than the national rent growth over the same period, which was 1.0%.
Huh. So even with vacancy ticking up, landlords were still managing to push rents a little.
It seems so. And Coeur d'Alene has seen pretty decent rent growth historically. The 5-year average annual growth is 4.1%, and the 10-year is 3.0%. So there's been underlying upward pressure for a while.
Right. And do those asking rents vary much by building quality?
They do. The report shows asking rents for the limited 4 and 5-star space averaging $23.71, 3-star at $20.31, and the overall market average, as we said, $21.71.
Okay. Let's shift gears to leasing activity. Any notable leases signed in the months leading up to or during Q1 2025?
Yeah, looking back over the 12 months prior, there were some significant moves. For example, there was a lease for about 12,500 square feet at the Riverstone office building right in Q1 2025.
Okay, first quarter deal. Any others?
And late last year, Q4 2024, there was a larger one, nearly 19,000 square feet leased at 7400 North Mineral Drive. That same building, 7400 N Mineral, actually had almost 30,000 square feet of positive net absorption over the full 12-month period.
So some buildings were definitely attracting tenants, even if the overall market absorption was flat in Q1 itself.
Correct. Activity wasn't dead, just balanced out overall in that specific quarter.
All right, let's talk about the sales market. Buying and selling office buildings. What happened in Q1 2025?
Q1 specifically saw relatively modest activity in terms of dollar volume. There were 5 deals that closed.
By sales and the total value.
The total sales volume for those 5 deals in Q1 was $0.7 million, so about $700,000.
Okay, that doesn't sound like a huge amount. How did the pricing look on those deals?
The average price per square foot for those Q1 sales came in at $230.31, and the average cap rate was 5.9%.
Okay, $230 a foot, almost a 6 cap. How does that Q1 activity compare to, say, the whole previous year?
Well, looking at the full past 12 months, there were 21 properties traded. That's actually more properties than the 5 or 10-year annual averages, which were around 64,000 and 62,000 square feet of turnover, respectively. The recent 12 months saw 150,000 SF turnover.
More properties trading. But what about the total value? Was the $0.7 million in Q1 indicative?
That's the interesting part. The total sales volume for the entire previous 12 months was only $1.4 million. So Q1 accounted for half of that low annual volume.
Wow. Okay, so 21 deals only added up to $1.4 million over a year. That's much lower than historical averages, right?
Much lower. The 5-year average annual sales volume was $11.7 million, and the 10-year was $10.1 million. So yes, the recent activity, including Q1, involves significantly lower dollar amounts overall, suggesting maybe smaller buildings or perhaps lower value transactions.
That paints a clearer picture. More churn, but less capital flowing. How does Coeur d'Alene's overall market pricing stack up nationally based on estimates?
The estimated market price for Coeur d'Alene office properties around early 2025 is about $124 per square foot.
$124. That's quite a bit lower than the $230 average for the actual Q1 sales, though.
It is. The $124 is likely a broader market estimate across all property types and qualities, while the $230 reflects the specific small sample of properties that actually sold in Q1. But importantly, that estimated 124 SF market price is way below the national average, which is estimated around 258 SF.
Okay, significantly more affordable on a per square foot basis than the U.S. average and cap rates.
The estimated market cap rate for Coeur d'Alene was pegged at 10.5%. That's higher, suggesting potentially better initial returns compared to the national average estimate of 9.0%. Again, this market estimate differs from the 5.9% average for the specific deals done in Q1.
Right. Different metrics telling slightly different stories there. Were there any specific sales in Q1 2025 worth noting?
Yes. The report mentions a few transactions in Q1. For instance, 1110 East Polston Avenue sold in late March. There were sales involving units at 1110, 1114 West Ironwood Drive, and the Niter Square condos in March and February, respectively. And 1200 West Ironwood Drive sold early in January.
Okay, good to have some specific examples. Now, stepping back a bit, can you give us the quick economic backdrop for Coeur d'Alene? What drives the local economy?
Sure. Historically, it was logging and mining, but that's shifted quite a lot. Tourism is a huge driver now, with the lake and surrounding natural beauty.
And Idaho's been growing fast, hasn't it?
Oh, absolutely. Idaho saw significant population growth again in 2024, largely fueled by net migration people moving in, especially quite famously from California. We're talking tens of thousands moving in.
And that kind of influx must impact things like cost of living, right?
Definitely puts upward pressure on housing costs and the general cost of living. Beyond tourism and construction, the government sector is pretty significant in Coeur d'Alene, about 16% of employment, and leisure and hospitality is around 15%.
Any big employers people might recognize.
Yeah, Kootenai Health is a major one. The Coeur d'Alene Resort, of course. Bread Financial, and Hecla Mining still has a presence too.
Good context. What about submarkets within Coeur d'Alene? Any key differences there noted in the Q1 report?
The report breaks it down into areas like the CBD, Greater Coeur d'Alene, Hayden-Alton Gardens, Kootenai, and Post Falls. The main specific call-out for Q1 was that the limited construction activity, that 6,200 square feet, was all happening in the Hayden-Dalton Gardens submarket.
Okay, so that's where the new supply, minimal as it was concentrated.
Correct. We don't have specific Q1 vacancy or rent breakdowns by submarket in this particular data set, unfortunately.
Understood. So let's try and wrap this Q1 2025 picture up. If you had to summarize the state of the Coeur d'Alene office market based purely on that first quarter data, what are the main takeaways?
Okay, summarizing Q1 2025. Vacancy was up to 5.7%, noticeably higher than historical norms. Net absorption was flat zero. New deliveries were moderate at 54,000 SF, but construction starts were very low.
And rents? Sale.
Rents showed modest year-over-year growth despite the vacancy, with the Q1 asking rent at $21.71. The sales market in Q1 saw a few deals, low dollar volume, 7-day cents, but the deals that did happen were at a relatively high price per square foot, $230, and a lower cap rate, 5.9%, compared to broader market estimates.
So a bit of a complex picture. Higher vacancy, sluggish leasing, slow construction, but rents still nudging up, and the few sales commanding decent prices but low overall volume.
That sums it pretty well. A market in perhaps a state of adjustment or transition in early 2025.
So for you, our listener, what does this Q1 snapshot mean? You've got rising vacancy, flat absorption, slower sales volume compared to the past. It certainly raises questions, doesn't it?
Hmm.
What kind of opportunities might this create for businesses needing office space, maybe more negotiating power? And for investors, does the lower volume in pricing compared to national averages signal a potential entry point or maybe a reason for caution?
Definitely thing to consider. It sets an interesting baseline for the rest of 2025.
Absolutely. And if you do want to dig deeper into the nuances of the Coeur d'Alene market, the insights we discussed lean heavily on the work of Eric Peterson. He's a local expert, and if you have specific questions, he might be a great resource. You can reach him at 509-903-9077.
Yeah, local knowledge is always key in these smaller markets.
Well, thanks for taking this focused deep dive into the Coeur d'Alene office market's first quarter with us. Lots to think about there.
My pleasure. Always interesting to see the data unfold.
Until next time.